Welcome back. Today we're covering one of the biggest developments in the Monad ecosystem and why it's suddenly attracting so much attention across the crypto market. Over the past several days, Mon has delivered an impressive rally of more than 30%, leaving many investors wondering what triggered such a strong move. The answer isn't just another exchange listing or a short-term hype cycle. Instead, a major product launch from MetaMask has introduced a completely new way for users to earn yield while spending their crypto like everyday money. That announcement has not only boosted Mon's price, but has also driven a massive increase in trading activity and investor interest. In today's video, we'll explain what MetaMask's new money account actually does, why Monad was chosen as the exclusive blockchain for this launch, what the latest on-chain numbers reveal, and whether this momentum could continue in the coming. As always, this video is for educational purposes only and is not financial advice. Always do your own research before making any investment decisions. Weeks. Let's get started. MetaMask officially introduced its new money account on June 30, and the launch immediately brought fresh attention to the Monad ecosystem. Within just a few days, Mon experienced a sharp rally, climbing from roughly $0.017 to nearly $0.023, representing a gain of around 32% over the week. While price appreciation always grabs headlines, what made this move more interesting was the reason behind it. Instead of reacting to speculation alone, the market responded to a product that connects decentralized finance with everyday spending in a much more practical way. The new money account allows users to hold digital dollars known as MUSD, earn a variable annual yield of up to 4%, and spend those funds directly using a Mastercard-linked MetaMask card. This means users no longer have to manually move funds between multiple DeFi platforms every time they want to use their crypto. One of the biggest reasons investors are paying attention is because Monad became the exclusive blockchain powering this entire payment system. Every card transaction, balance update, and settlement runs through the Monad network, meaning each activity creates demand for the blockchain itself and requires Mon tokens to pay network fees. That exclusive role immediately strengthened confidence in Monad's long-term utility, rather than simply creating another short-lived news event. The excitement surrounding the announcement was also reflected in blockchain activity. Only a few days after the launch, Aave v3 recorded more than $75 million in deposits on the Monad network within a single day. Although these deposits were part of Aave's own deployment and not directly connected to every money account user, the timing highlighted how quickly liquidity was flowing into the ecosystem. At the same time, the derivatives market became significantly more active. Trading volume for Mon futures jumped approximately 292%, reaching around $61.17 million. Meanwhile, total open interest climbed more than 19% to roughly $75.55 million. These numbers are important because they show that traders weren't simply taking profits after the announcement. Instead, new positions continued entering the market, suggesting that many investors expect further movement ahead. To better understand why this launch matters, it's important to look at how the system actually works. The money account is built around three major components. First comes MUSD, a stable digital asset backed one-to-one by US cash and Treasury securities. Since the reserves are held outside decentralized finance protocols, the backing remains separated from lending risks that can sometimes affect other stablecoins. The second layer focuses on earning yield. Instead of paying interest directly, the system routes deposited funds into specialized vaults that allocate liquidity across decentralized lending markets. Initially, these strategies include Morpho, while future integrations are expected to include Aave as well. This means users continue earning yield generated by decentralized lending activity rather than receiving rewards directly from the issuer itself. The third component connects everything together through real-world payments. Once funds are deposited and earning yield, users can spend their balance globally using a Mastercard-linked MetaMask card without manually withdrawing assets or transferring them between multiple applications. This creates a much smoother experience than traditional DeFi workflows, where users often need to bridge assets, switch protocols, confirm several transactions, and wait before accessing their funds. Another major difference is ownership. Unlike many centralized financial platforms where users hand control of their crypto to a company, the money account keeps users in control of their own private keys. The vault infrastructure manages how assets generate yield, but ownership remains with the user instead of being transferred to a centralized custodian. This self-custody approach is one of the features that separates the product from several existing crypto payment solutions. It also explains why many industry observers believe this launch represents more than just another wallet update. The global stablecoin market has already grown beyond $240 billion, Yet one of its biggest challenges has always been connecting decentralized finance with everyday spending in a simple user experience. MetaMask's latest product attempts to bridge that gap by allowing users to earn yield while maintaining immediate spending access through a payment card. Monad's fast transaction processing also plays an important role. Because transactions finalize quickly, card payments can be authorized almost instantly, creating an experience that feels much closer to traditional banking services than earlier blockchain payment systems. This combination of self-custody, yield generation, and fast payments is what makes many investors view the partnership as an important milestone for the Monad ecosystem. Of course, strong fundamentals don't eliminate market risk. The derivatives market now deserves close attention because rapid increases in open interest can create larger price swings in either direction. When price, trading volume, and open interest all rise together, analysts often interpret it as fresh capital entering the market, instead of simply existing traders closing bearish positions. That generally supports bullish momentum because it suggests new buyers are participating. However, leverage also increases overall risk. If MON continues climbing and successfully breaks above the important $0.024 resistance level, many traders could begin targeting the next technical zones around $0.030, followed by approximately $0.036. On the other hand, if buyers fail to push through resistance, leveraged positions could unwind quickly. In that scenario, the price may revisit support near 20 cents before determining its next major direction. As always, short-term volatility remains a normal part of cryptocurrency markets, especially after significant rallies driven by major announcements. Overall, MetaMask's money account launch has given Monad one of its strongest real-world adoption stories so far. The combination of self-custody, DeFi yield generation, and everyday Mastercard spending introduces a practical use case that extends beyond simple token speculation. The announcement helps MON gain more than 30%, attracted millions of dollars in new derivatives activity, and brought substantial liquidity into the Monad ecosystem. While technical resistance still remains ahead, many investors will now be watching whether user adoption continues growing after the initial excitement fades. The coming weeks could reveal whether this becomes a lasting catalyst for the network or simply another short-term rally. Either way, Monad has clearly become one of the crypto projects attracting significant attention right now. Thanks for watching. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss the next update. See you in the next one.